Hi everyone, this is Alex Kasmark. Today is Tuesday, February 8th, 2011. This G7 outlook is good for the next 12 to 24 hours and is intended for Vanguard Access employees. We're going to start things off by looking at the Aussie dollar. Earlier in the day, retail sales disappointed, continuing with disappointing economic data out of Australia. This time retail sales coming in at 0.2% increase versus a 0.5% expected. We're a bit surprised that the Aussie is still being able to maintain levels above parity. As we saw over the past few months, the market has had a difficulty maintaining these levels. So once in November, once again in December, and once again we're testing that 102 level once again. Now if that level fails, what we're going to be seeing is quite a bit of a move to the downside. Specifically, once we break this 98 figure, we should see continuation to the downside. What is troublesome is every time the market gets below this parity level, we see the market continuing to buy the Aussie, and at this point this may be an interest differentials play with Aussie maintaining higher interest rates than abroad. And until we see movement below this 98-cent level, we're going to be neutral in this pair, maybe maintaining a longer term bearish position on the Aussie dollar. Moving on to the euro dollar, currently trading at 136.27. What we're looking at right now is a move that hasn't been able to sustain this 138.60 top. We saw a bit of a sell over the past few days last week, then another move higher, and then once again weren't able to maintain the levels above 137.60 and continue to see a sell-off, this time setting a lower low, and from here on out we're going to be looking for a retracement and continuation on down to 132.50 area. We can also see that there may be a Fibonacci play here. Right now market retracing just at the 38.2% level, so we are going to be looking to open short positions between the 136.50 and a 137.20 level, maintaining stops just above 138.60. Our target profit target could be down to the 132.50 level, maybe even as low as the 130. Looking at the pound dollar trading at 161.43. At this point we're looking for the pound to continue gaining ground. What's going to be key here is this high at 162.70. Going back to November, we saw that high twice now, maybe a double top. We're going to be looking for a move back down to the below 160. We'll see how the market reacts around that level, and then we're going to be looking for a push back down to 153.50 towards these lows. Looking at the dollar Swissy trading at 95.42, we've been pretty consistent with looking for a long position, maintaining stops just below this 93 level, 92.75, 92.80. Here we have a potential double bottom. The market was not able to set a lower low. We've seen a bounce back, and at this point we're looking for a bit of consolidation, some sideways trading, maybe a move back down to 94.50 before continuing on back up to that near parity level, and of course we're going to be looking for a break above 98 cents. Looking at the dollar yen trading at 82.23. Right now market's been in a pretty nice range between 81 and around the 83 level, slowly heading down. We've seen a pretty nice bounce in this general vicinity, and at this point we're looking for a break above this downwards sloping trend line, and once that level is broken we're going to be looking for a break of 83 just above this pivot high to confirm continuation up to 84.30, and then maybe even higher above 85. Dollar CAD trading at 98.98. We are looking for continuation higher, back up to this parity level, towards this downward sloping trend line. Pretty good support at that 98.20 level. Stops will be just below that figure at 98.20. Once again looking for a move higher, and then we're going to be looking for consolidation before a potential move back up to the 103 level. Kiwi dollar trading at 77.40. So far been looking for a bearish move to the downside below 76.50. Although the market has broken this downward sloping trend line on this green candle, market was not able to sustain that move above 78 cents, and we saw a move back down below this downward sloping trend line. However, now the market is trading back up above 77 cents at 77.40. It's going to be interesting to see whether or not that 78-cent level is going to be able to maintain as the pivot high. And if that is broken, we'll be looking for continuation higher. However, with the strong Kiwi making and causing an impact on the economy, we're going to be looking for potential longer term sell on the Kiwi dollar. So we may see a move back up to 80 cents before that fails, and then going to be looking for a short position to mature, and then we'll be looking for a move back down to the lower 70s. Pound yen, we are seeing a breakout above this downward sloping trend line. This is the daily chart, currently trading at 132.73. Market has been finding resistance around 132. Finally, we've broken above that. We have closed above that, and now we're looking for a continuation higher above 133. Once that occurs, we'll be looking for a continuation higher. That should support the pound dollar moving higher as well. If the market moves back down into this range, we expect it to not go below 131.70. Expect that to be a retracement before continuing higher. Otherwise, a break below 129.80 should give the market the go-ahead to move lower. Euro yen, looking at a few things here. First, Fibonacci retracement, we can work it several different ways. We can see this one big move higher, retracement of 38.2%. We can also break it down into these smaller moves where the market moved up, retraced a bit, continued higher, and then we can also apply that. That's a perfect retracement here, 61.8%. Now looking for continuation higher. If this does occur, we're going to be looking for a break of this high before entering a position for a longer term move higher, as the market is still trading below this downward sloping trend line. Given the problems within the Eurozone still ongoing, the Euro yen may see quite a bit of volatility as it has experienced over the past few months. Once again, this outlook is good for the next 12 to 24 hours. Thank you for watching. Have a good day.